Time now for the markets with Leighton, and you say the biggest buyer of U.S. soybeans is in the spotlight this week?
It is. We'll be reporting on the soy industry leader's visit to China in a moment. Also ahead this week in this segment, grain prices spike up and down. Cotton faces a demand problem, and the beef sector expects more herd liquidation in the United States. Analysts report the condition of our nation's corn crop continues to decline. Almost half of the U.S. crop now rated poor to very poor. At the Wednesday close of the market's December corn closed right on support, though, at $8. Traders say that support needs to hold if the corn market is going to make yet another leg higher. Well, in the drought-stricken Midwest, there has been some rain this week, and it's generally thought the showers could be beneficial to the soybean crop, even if it was too late for the corn. Demand for bean remains strong, and price will have to ration a limited supply. Analysts say they believe November will need to close above $16.91 if the uptrend in price is to be extended. Well, China is the #1 buyer of U.S. soybeans, and members of the U.S. Soybean Export Council have been in that country this week celebrating the ongoing trade partnership. Last year, Chinese imported 895 million bushels of whole U.S. beans. Now, that's more than half of all U.S. soybean exports. In the cotton market these days, the outlook for U.S. production is slipping. Now, while that is a supportive factor for prices, it is counterbalanced by the fact that global stocks of cotton are still huge. Analyst Tom Fitzenmeyer says there's also another problem for this market.
Longer term, the demand for cotton is not so good. That high price we had a couple years ago really killed the demand for cotton. And this is always what happens. You get cotton prices high, and all of a sudden the designers and all the people that are involved in the clothing industry all of a sudden start designing stuff for synthetics. And the synthetics come in, cotton gets hurt, and that's what's happened here. The demand for cotton has been reduced, and I think you're going to see it just chop around here probably in this, the low 70s for a while. Before that demand, it gets cheap enough that demand starts to shift back toward cotton again.
The rice market shares one characteristic with that cotton market. There are big world stocks of the commodity right now. Analysts also note that slow export demand doesn't bode well at all for the future. Traders are not anticipating any significant upward move in rice prices. Well, our trivia quiz this week combines the topics of livestock and drought, so let's take a look at it now. How much of the U.S. cattle inventory is located in regions of drought? The possible answers: 25%, 48%, 62%, or even 70%. I'll tell you which one is correct shortly. Many analysts are not exactly optimistic about the outlook for the feeder cattle market. Analyst Sue Martin lays out her expectations as well as some concerns for this sector of the beef industry.
Well, I think the cattle market is got some tough times to go ahead. We'll get some bounces, but this heat has really worked over demand. Now the rain's coming up and cooling on the East Coast is going to be a godsend here for a little bit. But to be honest with you, the drop in the feeder market's going to continue, I think. I fear, we've had wave 4 counts on the downside, but rallies are going to be met with selling. And we're going to continue to see a liquidation of cows coming off of pastures and moving into the packing houses, and then the calves going to auctions. Lightweight calves will have a home easily. The heavier weight ones, because they're going to demand corn feeding, probably will be taking a drop in price.
Here's that answer for our first trivia quiz of the month of August. The last choice is the correct one this week. D. Cattle Facts reports that 70% of the U.S. cattle inventory is located in regions of drought.